Real estate investment practice problem using Excel. Amortization schedule, changing the terms and looking at the impact on the payments and other components within our practice problem. Get ready because it's time to raise the stakes with real estate. Here we are in our Excel worksheet. If you have access to the Excel worksheet, would like to follow along, note that we have 3 tabs on down below: an example tab, a practice tab, and a blank tab. Let's take a look at those 3 tabs, starting with the example tab, in essence being an answer key. We have the information on the left-hand side. In prior presentations, we did adjustments to some components, including the rate. We added a nice little drop down, and then we adjusted the loan amount and the value of the home with a drop down. You can see the data down below, calculating the payment on them if we hold everything else constant. This time we're going to be looking at the next factor, which is going to be the term of the loan, 30-year, 15-year, and so on. Changing the term, looking at the impact that that will have. Now, first we'll do the same kind of analysis. We'll go down here and say, well, what if I change the terms of the loan, holding everything else constant? What will be the impact on the payment? We'll calculate that, and then we'll keep the amortization table that we had in prior presentations. If you want to learn how to build that, take a look at prior presentations. We'll use that to construct a pivot table, which will give us the year-by-year breakout, and then we'll use the pivot table to break out these tables on the right-hand side for some more information. Now, note that when we look at the term, we have this one more little wrinkle that we want to point out here before we get started, that being that if I change the term to, say, 10 years, we have a problem in that this amortization table continues on to 30 periods. So you can see here that it ends after 10. It looks good to here. It goes to 0 just like it should, but it should cut off at that point in time. Instead, it's continuing on all the way down. That means our totals are not going to be quite right down here, of course, on the amortization table. Now, we could get fancy and try to adjust that on the amortization table, but note the totals down there aren't really that important because we can calculate them here by just saying that the total payments are going to be the payments times the months, which are going to be 120, and the interest is simply going to be in total for the total period, the interest or the payments minus the loan amount. So we really have the totals down there already. What we really want from this amortization table is the month-by-month breakout, and what we have a similar kind of issue over here with our pivot table. But again, what we want with the pivot table is going to be the month-by-month breakout as well. So if I update the pivot table, we refresh, we have the same kind of issue here. Cuts off at 10, but still it gives us the information we need. So that's one little wrinkle that we got to keep in mind as we go. If we go to the practice tab, this will give you some pre-formatted information, making the data input a little bit easier. So the data input might be a little bit easier here given the fact that we have some pre-formatting. And then in the blank tab, we're going to do all the new stuff from scratch from a blank cell. So that's why we're calling it the blank area. So we're going to go over here on the blank and we're going to continue on. So our data, we've got the home value at the 500, 20% down. That's a down payment, 100,000 loan, then 500 minus the 100 or 400. We're going to start off at the standard 30-year loan. The months are going to be 360, which is 30 times 12 rate. We're going to keep constant at the 5%. The payment was first calculated at that $2,147.29. Now I'm going to adjust the payments calculation here to make sure that I pick up the payments calculation referencing the months up top so that it'll calculate the proper payment even when I change the periods. So what we're going to do is take the payments, which is going to be that payment, times, and instead of typing in 360, we should be drawing that from this data cell up here, so that when that cell changes, if I change it to a 15-year, it'll calculate it properly. The interest will then be the total payments minus the loan amount. And so there we have it. And that'll help us to get those total numbers that we're going to need here. Then we're going to add our new thing that we're going to say this is going to be the years, let's say, years. And this is going to be the PMT. We'll see what the impact of changing the number of periods will be on the payment. So we'll select those. Let's make that a formatting bucket. We'll make that black and white. Let's center it, alignment and center. The years I'm going to do this way. I'm just going to say increments of 5, 10, 15, 20, 25, 30, so on. And then to do that, the cell underneath will equal the cell above it plus we're going to say 5. And then I can copy that on down, or autofill it. And it should say +5 all the way down till we get to 40. I'm going to bring it up to 40. So we're looking at a loan term 5-year to 40-year, 5 to 40. Payment, alignment, center. Let's look at the impact on the payments now. We're going to do our trustee payment calculation. If we hold everything else constant, meaning rate 5%, loan amount $400,000 stays constant, what changes then? The years, not simply static at 30 years, but going from 5 to 40, what will be the impact on the payment? Payment calculation, negative PMT, so negative instead of equal to flip the sign, making it a positive number in the result, PMT. You can then double click on the PMT or shift 9. There's the rate. We want the rate. We're going to keep that static at the 5%, bringing it from the data up top. That then needs to be an absolute reference so it doesn't move down. F4 on the keyboard, $ before the B and 7. You only need a mixed reference, but an absolute one works. That's a yearly rate, so we need to divide it by 12 to get the monthly amount. Comma, the number of periods, that's going to be what we're calculating on the left-hand side. The periods we have over here in years, we need monthly periods. So I'm going to pick up that cell and then multiply it times 12. No absolute reference needed because we do want that one to move down as we copy down, comma. The present value will be the loan amount, which we're going to keep static at the 400,000 up top. That one, we don't want this cell to move down, so we're going to make it absolute. F4 on the keyboard, $ before the B and 4, and enter. Let's go ahead and copy that down. We can put our cursor on it, fill handle, double click the fill handle, and there we have it. If we go down to the 30, just to double check it to see if that comes out to the same amount we had up top where we calculated at 30, we got the payment of the 2147.29, 2147. If we add decimals in the number area, 29. I'm going to get rid of the decimals just to unclutter it. And then we'll add our blue, our formatting, go into the font group. Let's put some borders around it, all borders. Hitting the bucket drop down to make it blue. If you don't have that blue right there, you can go to the more colors in the standard area and hit that blue right there. That's the one, making it fancy. Okay, so that's the first thing we would probably want to see. Well, if I hold everything else constant and I'm looking into different loan terms like a 15-year versus a 30-year or 20-year, what's going to be the impact on the payments? And you would expect as you pay it off in a lesser time period, the payments to be going up, because of course you're paying it off earlier, but there's other things to consider, including how much interest are you paying and so on. So we might then want to break it out in our other formats as well to analyze other components of it. So what we're going to do now is we're going to change this one to make it a fancy cell with the drop downs, because we did a drop down thing up here and we did a drop down thing. So let's do the drop down thing using this as our range, making it fancy-pantsy, which I can't do too much because I'm wearing shorts, but we'll make it fancy-pantsy as much as we can. We're going to go to the Data tab up top to do it. We're going to go to the Data Tools. We want to go to this item right here, which is the Data Validation, and I'm going to hit that one. And then on this cell, we want to not allow any, but we want the list. We want a list. We want to get it from a list. And then we're going to hit in the source. Where is that list? It's right there. We're just going to draw a box around it. That's the list. That's the one we want. And then we're going to say OK. And there it is. That's pretty fancy-pantsy drop down for someone wearing shorts. So there we have that. Now we're going to then use that data to create a pivot table. Now note, this is our problem here, because if I hit this and I hit the drop down to 10, remember we've got that issue here. If I scroll down past 10, the amortization table still works, and we know it does because it went to 0 right there, just as we would expect. But everything beyond there is mute now. It doesn't really help us, and the totals at the bottom are going to be incorrect. Remember, it doesn't really matter that the totals are wrong if I'm confident that my monthly payments are correct for our analysis here generally, because I have my totals right here. I know what the total payments are for the total term. That's not difficult. I know what the total interest is. That's not a problem. What is a problem is the interest per period, and particularly most likely per year. And that's what we're going to kind of look into. So it should be okay still. Should be okay. Don't panic. Don't panic. We'll bring it back to 30. So there we have it there. So now let's go ahead and make our pivot table and build our other couple information that we can draw from it. Obviously, we have our slicer here, so we could see this, on a year-by-year basis if we so choose and whatnot. But we want the pivot table too, so let's do it. Insert, pivot table. We're practicing putting in the pivs. And then we're going to go down here and say this is going to be the existing worksheet location. I'm going to put this in the existing worksheet just to have it all in one place here. Putting it in column K. Remember, you got to be up in row 1 to do that. So make sure you're in the top row typically. And then OK. There we have it. And so there's our information. So I'm going to build this quickly because we've seen this a few times. So we just want to be able to construct this fairly quickly. Remember, these pivot tables can be finicky. They can be weird. They can get a little glitchy. So it's nice to be able to construct them fairly quickly. Once you do it a few times, not too difficult. The year, it's going to try to put that in the values because this is a value cell and not text, but it's really something we want over on the rows. So there we have it. And then we're just going to pick up the payment, the interest, the loan reduction, and the loan balance. And now we just need to format those items so they don't look funny like that. So they don't look all funny. We want this, like formatting. Formatting would be nice. So we'll hit the value drop down. We want the value field. And we're going to say format, new number. And let's make that currency, bracketed, no $sign, decimals, removed. Let's do it again. Okay. Otra vez, one more time, or another time, something like that. It means something like that, I think. So we're going to say currency, brackets, and then none, moving the decimals, and then okay, 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 okay. And then we're going to do it again, value. We'll do it again, numbers, currency, brackets, and then there, moving the decimals, and then okay, okay. And then the last one is a little bit tricky. This last one, you'll recall, this one's a little bit tricky because we want the ending balance, not the sum. So we want the min number of the series, the min of the series, then numbers, currency, bracketed, negative, none, decimals gone. Okay, okay. And then there we have it. So that now we could just format this a little bit if we so choose. And I do choose to format it. So let's do it. We'll select these items here. We got down to 30 payments. Let's put some brackets around it. Font group, brackets. That looks good. Let's embolden it. It's been emboldened. And then we'll take a look at our headers up top. Let's do our standard black and white thing on that. Black and white. We're going to wrap the text. Let's center it. And let's make this one centered. Centered. And then I'm going to select all these columns and squish them in a little. Make them closer together. Not too close. I don't want them to feel uncomfortable when they're shoulder to shoulder, but so that we can see our data on the other side. So then we can use that to kind of construct our summary data. Now, so we might want to see, for example, the interest. So I'm gonna say, what if I hold the 5% constant, the 400,000 constant? What will be the impact on the interest payments, for example, if we look at the years, and then we have 10, 15, and 30. So we're going to break out the years here, and then we're going to say 10, 15, and 30 year loan, adjusting the term, holding the rate constant and the 400,000 amount constant. So I'm going to do some formatting here. So I want to copy this across. You could do this by going to the alignment and merging like that. But then it kind of combines all those cells, and I don't like doing that because it could mess other stuff up. So I go to the right click on it, which is another way to do it. This is way better, I think. I feel like, my personal opinion. Horizontal, we're going to go to the horizontal drop down, center across the selection. Same kind of thing, but way better, way better. And then we'll select these items. We're going to go to the home tab. We'll make that a center. So that looks good. And then let's make this whole thing black and white for our header. And this one, maybe we can make it a little larger by going to the drop down and say, let's make that like a little bigger. All right. And then years. Why don't we spell that right? How about that? That would be good. And then we'll say 1, 2, 3, adding this down to our total 30 periods. That's how far we're going. 30 periods. Let's center that. There we go. And let's just do the other one that we've been doing here. We might want to know what the loan balance is as we go through this thing. So we're going to be holding the 5% constant, the 400,000 loan constant, but then we want to take a look at the loan balance. What's going to be the impact there? And then we're going to have the same years, 15 term or 10 term, 15 term, and 30 term. And I think we could just do the same formatting. Let's just grab the formatting here by going to the Home tab, Clipboard Format Painter, and just paintbrush it. Just do the paintbrushy. And then 1, 2, 3, copying that down to 30 as well. Center it, center, we're centered, totally centered and focused. Okay, so then if I move this to the 30, that's where we have it right now, so that looks good. We can then populate this. So we could say, okay, well, what if I take my interest for the 30 period here? I'm going to copy that. I'm going to paste it 1, 2, 3 on the 30 column. Paste it 1, 2, 3, just the values only. So this table will not change as we change the pivot table. We're pulling the data to do a comparison on a year-by-year basis. So we'll do the same for the loan balance, maybe. Loan balance, that's where we stand at the end of the 30-year time period. And then let's say we change this on up to like 15 years. Change it to 15 years. See what the impact will be. This table changes all the way, automatically. Let's change the pivot table by right-clicking on it and freshen it up with a refresh. So there it is. So now we got this kind of funny looking thing because, again, it stops right here after 15 years. Everything below that is not useful to us, but we could still summarize it quite nicely here, and we could take the data that we need and populate it on the right-hand side. So we got the interest then is going to go here. This column, copy. I'm going to paste that in the 15. And then the loan balance, so we can do the nice comparison on the loan balance. And notice I'm not going to copy the whole table. I'm not copying the negative numbers. I'm just copying the applicable numbers. Obviously, the term stops for this one after 15 years, right? After the 15, there's nothing there. That's why this comparison's a little bit tricky to comparing out the terms, because you got that, that difference in the term. Let's go back on over. Let's change it to 10, and let's see what happens. 10-year. The amortization table populates automatically. We got to right-click on the pivot table, refresh it, refresh, and now it stops at the 10. So here it is at the 10. We can pull that data over if we so choose. I could say let's pull over the interest, copy the interest, and paste that right there. Right-click and paste it 1, 2, 3. Let's take the loan balance, copy, and paste it 1, 2, 3. So if I was doing some comparisons saying, okay, how much interest would I be paying on a 30 versus a 10 and a 15 as time goes, you could see substantial changes and differences as the time is going past. And then, of course, you can look at the loan balances. What will be the loan balances, which will have a significant difference in the event that you're thinking you're going to sell it or move in a 10 years versus 30 years or something like that. If you want to look at the effect of different loan amounts. Let's format this now. I'm going to select this item and let's make it our blue and bracket it. Font group, brackets with the all borders, bucket, blue. Let's do the same thing over here. Bracket and blue, bracket and blue. So we're going to go brackets and blue. Let's put a total on this one. This one could use a total. And hit the equals, the SUM, sum. Then I'm holding down shift. I'm going to go to the summit of the column so that we could sum it. And there we have it. I love saying that. We're going to the summit of the, and then I'm going to copy this across. The sum doesn't work over here because this is the ending balance, so we don't have a sum on that side. And then we're going to go to the font group and bucket and border. And so there we have it. That's just how we can, one way we can kind of construct this. And again, just to point out that you can do a whole lot more with an Excel table to kind of focus in on whatever your focus is than you might be able to do with, say, an online calculator or so on and so forth. So hopefully that'll give you some ideas on the different factors that you can be changing around here.